Hello and welcome to Real Estate Divas. Today we are going to be talking about how to talk to your private money lender or your hard money lender to get all the money you need for your projects right after this. Hello and welcome to Real Estate Divas. Today I have, along with my very beautiful co-host, Jer'Leigh Thompson, I have my very good friend, Angie Arrington from Bay Mountain Capital, and she is going to be dropping a ton of knowledge on how hard money lenders want to be talked to know that you are a serious investor and a good bet.
Absolutely. Thank you for inviting me here. I'm so excited to be here with you ladies.
Well, we're happy to have you. I think that's one of those things, being at a lot of trade shows or being at networking events and stuff like that, and you hear, especially newer investors, talking to either hard money lenders or, and they're putting out, they have no idea what they're asking and no idea what they're presenting. So I think this would be very educational to a lot of people that are out there.
Great.
And let's start with some basic terms. Obviously, hard money, it sounds scary.
It does sound scary to folks who haven't ever been the client of a hard money lender before, but it's just a fast form of money. We move quickly, and we can get your deal closed much more quickly than conventional lending.
And so that's why you would use
a hard money lender.
Hard money lender. Now, you are super sweet.
Thank you.
But when somebody doesn't pay,
not so sweet.
She will show up at your door with baseball bat.
I will show up at your door. No, I won't show up at your door, but payments are due on the 1st. So we have a range of clients from seasoned investors to people who are new to the business. I enjoy working with both. I love helping new folks who are getting on board, walk through the process. There are a lot of surprises. If you've never done it before, it can be confusing. Some of the terminology you might not be familiar with.
Well, and let's talk about some of that terminology. So really, hard money lenders, which they charge not only interest, but something called points. Can you explain what a point is for everybody?
A point is basically 1% of your loan amount. That has been a conversation I've had with a few investors. They don't know where the points are, where they're coming from. So it's based off your loan amount. It's 1% of your loan amount, usually 2% depending on whatever the fees are. So in many cases in most cases our fees are 2 points, 2% origination fee. So,
and that's what you all charge, is a 2% origination fee.
Yes.
Though, the one thing I have always loved with Bay Mountain is, that maybe you take more of a partnership.
We do.
Approach.
Exactly. We'd like to partner with our clients and help lead them through the process if it's new to them, or partner with our seasoned investors
as well. Approach. You're not really partnering.
Well, exactly.
I mean, you're lending, but it's a partnership approach because you are also gambling on them.
We are gambling on them, and our terms usually range based on someone's experience. So our leverage is lowered a little bit with those folks who don't have experience, but as you gain experience, that's where the partnership aspect comes in, because we can improve those terms. We can make them better for you. We can make deals for you as far as those terms go, make exceptions if you have a proven track record with us. So we like to build those relationships with our clients.
Well, and I was going to say, one thing I don't think a lot of investors, especially the new ones, know about hard money lenders is if you pick the right one, they will, because if you're new, you're constantly worried about, is this a good deal? Am I going to, can I make this deal work? If you're partnering with the right person, the right company, then y'all kind of analyze those deals in order to approve it to begin with.
That's exactly right. And basically, if you're bringing a lot of money to the table, it might not be the best deal for you.
So that's one thing that I've always told new investors. They're like, do you have any tips? And I'm like, borrow hard money, because they will tell you if it's a bad deal.
Absolutely.
And go, what are you doing? Don't buy this house. This house has power lines. Yes. And it's on like this busy street. You're never going to sell this thing.
There have been deals where I have been to the borrower and said, I want to work with you. I want to make this work for you. But explain to me why it's this house, because the numbers are not working out in your favor. Yeah. So, and some people have their reasons for whatever reason this is the deal for them. That just means you have to come to the table with a little more cash. So,
even if you don't like the deal and you're going, hey, this one is a little risky.
That's right.
From what we're doing. You'll still do it.
We'll still do it.
Yeah, we'll still charge you.
But we are going to charge you more.
Yes. We'll charge you a little more, and you'll just have to bring quite a bit of money to the table in order to make up the difference from the value. And if that's what works for you, we're willing to help you, sure. But I am very upfront and very honest with my clients about, this doesn't look like a great deal. Explain to me why it's important for you to do this deal. So let's talk.
So whenever investors come to talk to you, what would you say is probably some of the most important questions whenever an investor is trying to figure out what hard money lender that they're going to go with?
Well, you want to understand the fees. You want to understand the draws if you're taking a draw on your property. If we're holding rehab funds in a draw for you, you need to understand that process. Mostly what you need to understand, and I'm learning with a lot of people who are coming from other hard money lenders who are no longer operating right now in this climate, is that some don't have a rehab in place. To me, that is the biggest variable with any deal, and it's true from the time you submit your application until you sell the property, because that's where your biggest questions come in. You'll have issues that come up that you weren't expecting. You want that rehab budget to be solid, and you want a good contingency to cover you if you had any problems. So
how do you feel about when investors come to you and you know that rehab budget is light and really light? And as you know, when I used to hawk hard money, my go-to answer was, hey, we need to be able to, if we have to take this thing back, we have to be able to rehab it.
Yes.
But you know who I'm talking about.
Yes. Folks will come in and they'll say,
my cousin's going to do it.
My cousin's going to do it. My uncle's going to do it. I'm going to do it myself. Yeah. And that's great. Do those things if you can do them and you can do them right. But know that you're trying to build equity in the property. You're trying to build value in the property. So you don't want these things to be done halfway. You want to have somebody who knows what they're doing. You can get it done quickly. That is the biggest thing with people who come and they have questions about hard money. It's not inexpensive. It's not an inexpensive way to do things. It's a quick way to do things. It's an efficient way to do things. But you don't want to be running that rehab yourself. You want to have some professional come in and get it done quickly, so you can lease that property or sell that property or refinance or whatever your plan is. The rehab is the biggest variable for everyone. So you want that rehab to be tight. You want to make sure you have anticipated everything you can and have a nice contingency, because you will have issues that come up that you were not anticipating.
Always.
How much do you suggest to your clients that they should put in? There's always that contingency. There's always that miscellaneous. What percentage do you like them to put in there?
10 is a pretty standard, depending on the size of the rehab. I've seen people put 20. I've seen people just 20%. Do 5. Mm-hmm. So, and they've needed it. But it depends. If you don't know for sure, let's say you think the HVAC system might be in okay condition. You think you may just have to have it serviced and inspected. Put a little extra in contingency, and then you have it there. So maybe you do just need to have the AC inspected, but you didn't realize that the subfloor was rotted. I don't know. But you have some extra cash on hand. That contingency can save you in any scenario. So whatever comes up that you weren't expecting, it's there and you can use it.
So when somebody comes to you, because, especially just about every wholesaler that was out there a couple of years ago, all these new wholesalers, when wholesale was a new word for everybody, everything that hit my inbox was $30,000 rehab, $30,000 rehab, $30,000 rehab. You know, I mean, everything was a $30,000 rehab. So when y'all are looking at that property, then and analyzing it and about to loan with an investor, and they say $30,000 property, or $30,000 rehab, do y'all do any pushback? I know I've encountered that a couple of times of, are you sure?
Depending on the level of experience of the investor that's come in, and depending on the size of the rehab. So let's say the rehab is more than $30 a square foot. Then we are going to have someone come in and look at that rehab and analyze it. A feasibility inspector will go to the property, look at the rehab that has been put together by the borrower, go through it line by line and see if these numbers are realistic to get this work done. And they'll come in and tell you, you know, you needed to add $3,000 or $4,000 to the interior paint. You're good on these lines, you're good on these lines, you're not gonna replace the HVAC for $6,000. You know, so they'll go through and line by line let you know what you're missing and what you need to think about. And hey, did you even take into consideration the foundation? Because I don't see anything on the rehab budget. But it seems to me there's indication that there's some problems. So
Nice.
Yeah, very nice. So you've got somebody who's going to come in and evaluate that rehab budget as well once they do the inspection and going, yeah, I think it'll be good, or it needs to be
absolutely
bumped up. Another reason to use a hard money lender,
right?
Since you all have your team,
we do,
analyzing every inch of the deal.
We do, and all of our inspectors and all of our appraisers, they're third party, so they don't represent us. They don't represent the borrower. They're just there looking at the project and giving their opinion on what it's worth and what can be done and what needs to be done.
Well, and so for somebody who, let's say you're a seasoned investor, what can a seasoned investor that's always used their own cash or something like that, what would you say would be a fair expectation whenever they're using hard money? Because I do know several investors that have never used hard money ever.
Exactly. We have a few clients that have come to us after kind of funding things on their own or through private money before, but this is their first experience with hard money. And they can expect to, if they're a seasoned investor, get about 100% of their cost up to a certain ARV, which is usually about 75%. So you're really just coming to the table with closing cost in that scenario. And each step of the deal will be scrutinized a little bit less. But anytime your rehab budget is over a certain amount, whether you're a seasoned investor or a newbie, it will be reviewed by a feasibility study. So the process is not much different, but the terms are certainly improved as someone who has a lot of experience.
Nice. And are y'all just all over Texas, or?
We are in Texas, Oklahoma, Tennessee, Georgia, Alabama, and Florida. So hoping to
a few places.
Yeah, that's a lot.
Expand into New Mexico hopefully soon.
Oh,
and
cool.
We've done some things in Idaho.
Idaho.
Oddly, so always looking for the opportunity to open up a new market. So
very cool.
Which is excellent.
Yeah.
Let's talk about valuation of property.
That's usually the stickler with most borrowers. They come to you with a $10,000 rehab budget, and miraculously they're going to get $100,000 of value out of that paint and carpet. But so we order appraisals for the most part. I can also run comps for people who are new to the business to see if we're in the same wheelhouse, and if
before they have to pay
they have to pay that appraiser, I can kind of give it a look, see, and say, I appreciate your enthusiasm, but I don't think that you're going to get quite what you're thinking for this house. And just because you're putting in gold faucets doesn't mean you're going to be able to receive the value of all of those updates. So it's a delicate balance between what you're putting in the property and the value that you're going to get out of those improvements. You can't price yourself out of a neighborhood, but you want to make sure you do quality work and get as much out of the value that you put in. So,
well, and I know, like, originally whenever hard money, I started listening and I'm like, oh, hard money lenders, okay, they just lend on flips. Now things have expanded so much, and now hard money lenders are are lending on all kinds of nuances out there, whether it's short-term rentals or it's rental properties or transitioning into from a hard money loan into something else which I loved seeing, is that there's that new trend of hard money lenders becoming more having that opportunity to do a long-term lending
like a hybrid
solution.
loan,
Yeah,
right?
hybrid
You
loan.
start
Yeah,
with
you start with this and
short-term hard money, and then you
Flip it into-
hybrid
yeah,
and then
yeah.
switch it into
a
long-term.
Yes, we have. Recently, we've been seeing a lot of people who are coming to us with loans that kind of fell apart at closing. And so we need to quickly secure financing for them. So it's not necessarily a flip. Maybe the property's in great condition, but they want it to be a rental. And they want to get financing as soon as possible because they're already hit against that clock because their original financing fell apart. So we've been sweeping in and kind of trying to save deals like that. We can do that from time to time, just people who are wanting to purchase rental properties and get right into a rental loan. We can do that, or we can do the fix and flips, like you say. We can refinance into just your rental loan if you have maybe a hard money loan with another lender. We can help folks in that situation. So
you get creative.
we get creative. We do.
Well, that was one thing that I found so refreshing in the last, because it seems like it kind of started happening over the last year, is that all of a sudden, what was just this is just the typical loan that you're getting from hard money lenders is just for a flip. And then they started thinking outside of that box, which I was like, of course you should, of course you should start thinking outside of that box because you're already working outside of the conventional box. It only makes sense that you would figure out different, or hard money lenders would figure out different avenues to hang on to those loans for longer and make it easier for investors to transition into something else and not just do the flip.
Absolutely. We
Yep.
try to give them as many options as we can. And, just give me a call. There are times when maybe you have a deal you need to sell. I may know somebody who's looking to buy. We have people we work with who you're trying to sell a deal. You get to the table, your wholesaler can't close. Maybe I know someone who can
Close
come
it.
and buy that, close that for you. So,
That's awesome.
I love talking to people. I love trying to help people who are new to the situation or seasoned investors. So even if we don't have a product that you can use, I'm happy to talk to you and help you through the process of just real estate at large.
Yeah.
So when somebody comes to you and starts saying, oh, I want hard money, what are the requirements to get the ball rolling?
To get the ball rolling,
Because some people feel that they need to be pre-approved.
they don't need to be pre-approved. I get a lot of phone calls like that. Our terms, we're really more of an asset-based lender. So as long as the deal makes sense, we're going to approve the deal and lend you the money. When you come to your hard money lender, what you want to do is understand the terms that they can offer you. And the four pieces, I guess, of information that I really need in order to give you the information you need to know to see if this deal is going to work for you is the purchase price, the rehab total, and the ARV, and your credit score. A little bit about your experience helps as well because, as I mentioned before, our terms they start out for folks who have no experience, and then they improve as you gain a little experience. So with those pieces of information, I can let you know exactly what we can do for you based on the information that you've given. Now, of course, that can change during underwriting once all the numbers shake out.
Or in the case of this past June, when all of a sudden the whole world freaks out.
Exactly. So
A deal that was great in April is not good anymore.
No more.
It's a little more analyzing.
Yeah. So once you decide if we have a product that'll work for you, what we really are going to need is that purchase contract and your rehab budget. And at that point, we can order an appraisal and we can get everything rolling.
So that's the one question I always got from people. They'll call up and they're talking about this great deal, and then you don't hear from them, and you're like, hey, are you sending that contract over? I spent about 45 minutes to an hour with you, and it's been a week. Still haven't seen that contract. Oh yeah, I didn't get it. So
you didn't have
You didn't actually have a property yet to talk about. That was, that was probably the number one irritation. So, that's my advice. I'm like, if you're going to go talk to a hard money lender, have a purchase
Have the
contract.
property under contract.
Yeah.
Just have the contract so that they can see what the timeline is.
Yes.
Well, the timeline's important. I mean, I've had a hard money lender come in and swoop in and help me out just because I couldn't meet a timeline with a conventional lender. And then all of a sudden, here they are to save the day because, they could close in 4 days. Thank goodness.
Yes. Unfortunately, our days of closing in 4 days are no longer, but we do require appraisals, but we have a good network of appraisers in this area and other areas where we are established that can push those out pretty quickly. So
Is it easier to get an open appraiser and to get an appointment quickly right now?
it's really not just yet. There's still a little bit of backup, but we aren't having to wait near as long as we were before. 4, 6, 8 weeks out. Okay.
Yeah.
Wow, we are not a conventional lender. We cannot do 4, 6, 8 weeks out.
So
Exactly.
what did you all do in that instance?
In that case, we can order a BPO depending on the property, if it all makes sense. Things that are more rural are a little more complicated. Obviously, they take a little more time, but we can turn them out pretty quickly if it's an obvious deal in a metropolitan area that's easy to comp. So,
Yeah, those rural properties.
They can be doozies.
they can be doozies.
Well, I think that's all really great information. I mean, like I said, I remember whenever I first heard of hard money lenders and just the thought of it was very intimidating to me. And I didn't even know what questions to ask. I was like, I don't know, but that seems expensive. That's out of my ballpark, and it's hard to wrap your mind around if you're not used to doing that. But like convincing one of my partners, who is also my stepdad, convincing him that no, this is a good deal. We don't have to use all of our money because then we can put it in several deals rather than
Yes.
all in one and work on one at a time.
Right.
Yes, we're paying for that luxury, but it's worth it.
Yes, it is.
Sometimes
for
it's
sure.
Because
a hard sell.
your returns and your profits go
Yeah.
higher. So, and that's I think the biggest argument to use. I mean, not to mention having kind of a partner in the deal that's going to vet that deal and make sure you don't do anything stupid. That would be step one. But 2 is that your returns go so much higher. So if you're only putting in, say, I'm sure it's more than this, but just for argument's sake, I'm just making up numbers here. If you're only putting in $5,000 as opposed to putting in $100,000, you're dividing those numbers by the profit that you make, and that gives you your return on investment. Your return on investment is going to be much higher if you're putting in
less money.
Less
those
money.
less money.
Yes,
So,
your cash goes a lot further. So,
Exactly. That took me even a little while when I first got into this. Like, it took me a little while to get my head around that. But, I mean, once you do, you're like, oh, I'm all in. All right. But I think just knowing what to listen for, what to ask, and knowing that it's something, it makes sense, and that it is approachable, and it is something that you do get help with. Because that, as a new investor, I think that's the biggest issue, is getting over that hurdle of, oh my gosh, the sticker shock, but knowing that, oh wow, you're going to help me through this and make sure I'm not going to completely make a mistake or a buffoon of myself right here.
that's my job.
That's your job.
Well, and I mean, just getting to meet Angie and putting a face to hard money, I think is important. I mean, because you're not scary
I'm not, I don't think so.
right now. I've seen her
voice,
scary.
I'm not scary.
I've seen her very scary.
Well, thank you so much for coming on today. We really appreciate it, and just kind of sharing your wealth of knowledge about the hard money lending side of things and the nuances there. Why don't you let everybody know how to get a hold of you and how to get in touch with you?
Okay, you can go to Bay Mountain Capital. It has summaries of some of the terms that we offer, or you can give me a call at 972-567-9019. That's my cell phone number. You can reach me anytime.
Awesome.
Great.
Yeah.
Thank you so much.
Thank you, ladies. It was
Yeah.
my pleasure.
And Me, my dear.
Yeah, I'm like, which camera? I'm Jer'Leigh Thompson with Texel Real Estate.
And I'm Kristin Gerst with Capricorn Mortgage. Send me your owner finance mortgage notes to buy.
And please tune in, like, follow, subscribe, all of that jazz to our YouTube channels, TikTok, Instagram, Facebook, all of that. And if you have any questions or suggestions of something that you'd like to see on here, feel free to reach out. We would absolutely love to hear from y'all.
And make sure and download that podcast from anywhere you get your podcasts for that long road trip that you're about ready to take.
Exactly. Have a good one. Thanks for tuning in.